Joel, thank you very much for joining us here. Obviously, we had been talking for so long about tech valuations being very stretched. We just ran through a bunch of data points about how we've been selling off consistently. Is now a good entry point or just too dangerous to be catching falling knives here?
Yeah, good morning, Courtney. Thanks for having me on. I mean, yeah, right now, I mean, there's nothing about this tape that's saying you have to kind of jump in this morning. Maybe we'll get some sort of bottom, at some point as the day progresses. But again, waking up to another barrage of negative headlines with inflationary pressures and fears just kind of ratcheting higher, with crude kind of doing what it's doing. But I mean, tech growth and momentum sentiment has been terrible now since late November, early December, when Powell and the Fed really shifted their messaging on their policy moving forward. And you can just go back and look at the charts. A lot of these big winners that we saw coming out, during COVID and coming out of, and there's just really no risk appetite and no bid for vast pockets of technology. And the reality is that kind of the unwinding of COVID growth has been slowing, and those days of multiple expansion have come to a screeching halt. And we've just really been seeing, multiple compression as that kind of can work in reverse, the reverse end. So talking to my clients, I mean, there's obviously a lot of pain on a daily basis. There's been a lot more focus in 2022 of guys managing positions versus looking for new ideas. With that said, it does feel like buyers are higher for a lot of stocks. And again, that's been a strategy. If you've been a little bit more patient up to this point, especially, it's been paying off. So I don't think there's any rush to jump in head first into anything unless there's a little bit of value towards it, or it's a theme that you really believe in moving forward.
What if you have some cash to put to work? What if you want to jump in? You want to take some risks? Are there names you would recommend buying?
Yeah, I mean, within tech, I mean, I know Dan Ives is on the program, 8 times a week. It feels like cybersecurity has been a big focus here at Wedbush. Again, things were, the group was experiencing massive growth even before the Russian-Ukraine kind of situation erupted. So I look for names like Palo Alto. They're obviously a leader in next-gen security. SailPoint as well. They do identity and zero trust architecture. So cybersecurity is a place you want to have exposure to. You're only going to see CIOs kind of continue to spend there. And then maybe moving down a little bit, large cap value, Cisco, I view it as a winner from kind of a hybrid work environment moving forward. They have record backlog, $15 billion buyback won't hurt either. I just think you want to keep it very simple. And avoid the names really farther out in the risk curve, whether it's SPACs, the Cathie Wood stocks, Chinese internets, et cetera.
So the Cathie Wood stocks, not a place where you'd be playing, even though so many people follow her every move very closely?
Yeah, I mean, that's what's kind of scary about it. I mean, I don't think I'd buy ARK flagship with your money. I mean, I think her performance over the last 52 weeks says it all. She's trailed the NASDAQ by 51% coming into this morning. That's pretty astounding for a long only to do. The NASDAQ, I think, is up 3% over the past year. And again, she's down 48%. And I think what the last 12 months has told us about Cathie Wood is that there's zero risk management policy in place. There's no process. And you can look through her top holdings, whether it's a Teladoc, a Zoom, a Roku, these stocks have just been reversing and suffering from, obviously all the negative impacts of tech coming out of COVID, and she's stuck with them. She bought DocuSign on the blow up in December, and then she peeled out of that relatively quickly. That stock's down 40%. She bought Twitter on the most recent blow up a couple quarters ago as well, and has since been peeling out of that. So it seems like the strategy of averaging down, it never works, and she's sort of the poster child for that. And she's been kind of going on about people are shorting innovation. Well, I don't think these companies are that innovative to some degree. They benefited from COVID, a huge increase in demand and kind of multiple surging higher, and now they're all suffering from the same catalyst, but they're heading in the wrong direction.